The S&P 500 daily cloud chart shows the lagging line 26 bars back, and the bottom of the cloud 26 bars back is at 4288.02. And if there's a bounce off of that to the upside, this is good temporarily, but eventually it's going to have to come down and test into that 4200 zone or below. So that's really it. If it breaks down below that, the only thing around that area for Monday is a moving target S2, 4290.41, and the weekly baseline, which is stable for the week more than likely at 4279.30. And then below that, the only thing there is the moving average 200 EMA, 4263.82. And price nailed the ARC 0.50 at 4315.53, and zigzag is tracking along with the waves here. Which one is it though? D wave up wave 4 or D wave down wave 3? If it's tracking along with D wave up wave 4 and there's a swing point to the upside, it needs to get above this high on July 27th, and then the 5 will print. If not, then it's tracking along with the D wave down wave 3 for a swing point to the upside to go after the D wave down wave 4, and it will need to tick higher than this high, 4511.99, for the D wave down wave 4 to print, and then any higher than that and the D wave down wave 2 will shift over and replace that D wave down wave 4, and then the D wave down wave 3 starts all over again, and the qualified demand line at that level was qualified canceled, 4340.78. There was an open of 4341.74 that could have done it there to qualify cancel that, and it closed underneath it. And there's a lot of rules in DeMark regarding everything, but lines is probably the most in-depth when it comes to rules. So just a tick higher probably qualified canceled it. It really needs to stay under there all the way for it to get qualified and confirmed. And this is the second day in a row for price to close under both the lower Bollinger Band and the lower Stark Band. And the ARC 0.50 level was nailed, so there has to be some sort of a dead cat bounce or something to the upside. And if it's sustained and keeps on going, then we might have to forget dipping down into the 4200 zone. I'm looking for anything under 4300 to call this D wave up wave 4 validated. And that combo by countdown 10 slipped by me here. The 8 from over here, then the printed a 9, and now the 10. So we're just a few away from printing the combo by countdown 13. And add the sequential disqualified buy risk as support around that 4290 area to companion with the weekly baseline 4279 and S2 at 4290. So that's support until it becomes qualified and confirmed, and then there's more than likely more downside. And price nailed the disqualified exhaustion down for 50% here on that bearish engulfing bar here from the 20th. So that ended the disqualified momentum down right then and there. But that doesn't mean there's momentum to the downside. So the Shande indicator went from 6 positive down to almost 20 in one day, and is steadily growing bigger bars to the downside. So 75 is about the limit, and then you really start looking for a bounce if it makes it down that far. It hasn't been in the negative section since around the end of August, where it came out of it and really didn't do too much. One big bar here up to 40. So let's keep an eye on that. Negative 75. And the slow trigger down is just about to meet the fast trigger down and the pressure up here. So everybody will be gathering in the basement, it looks like. And that's another really good indication that things are really oversold. And then you'll see that fast trigger shoot up out of there. And we have to keep an eye on what the slow does. If it follows and gets above oversold 25, then we got something. But if it doesn't, then you'll see it just heads up real quick and then rolls over and comes back down for the fast trigger. But anyway, there could be the sequential and combo by countdown 13s. If that combo can print in a few days. The S&P 500 weekly chart shows that D wave up wave 4 printed, and it met its 38.2 Fibonacci retracement projection at 4327.97. So the D wave up wave 5 will print and a tick higher than this high, 4607.07, similar to the daily chart. So if the daily chart can somehow dip down into the 4200 zone, and I call that D wave up wave 4 over there validated, it's time to start getting on board a little bit at a time. There could still be more downside in the daily chart, of course, over here, and maybe even make it down to that 42-43 area where the 61.8 Fibonacci retracement level is at for the daily chart. Maybe even down to the 42.28 and 42.37 area there, that small zone. And that's shown nicely over here on this head and shoulders daily chart for the S&P 500. Here it is down here in brown. This is where the Fed made its first mistake by being late to get to the party here for inflation back in 2021. So this is an important area. You can see it jumped over it here on a gap up. So that was really incredible. And this head and shoulders pattern is lopsided and borderline, not a head and shoulders pattern, as the right shoulder is way bigger than the left shoulder, so we want to have that reversed. And the right shoulder is well more than half of the head here in the middle. So it's more like this is really nice here on the left one. So this is almost borderline, not a head and shoulders pattern, but it does have a nice neckline that it broke under. So the way I'm treating this one is I took the measurement rule from the right shoulder down to the neckline and then took 2% off. So you can see 4.5% and then 2.5%. So that brings it down to that 42.25/37 zone. So S&P price could make it down that far, or as we've seen, daily is definitely well oversold. It could have a pretty good bounce, and if it gains momentum to the upside, we might just have to call that daily D wave up wave 4 validated and just run with the weekly D wave up wave 4 that is validated.